Welcome to this morning's webinar. We were just sorting out the recording, so I think we're good to go, David. Yep, thumbs up. Brilliant, thank you so much. Right, but before we start as usual, can I draw your attention to the disclaimer that I know has appeared on the screen. As you know, this can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as I said earlier, I mentioned David. Here he is, he and I sitting together in front of some of our screens, in this session and the two further webinars that we have later on today, we'll be back later on just before the start of the New York session, and we do a third webinar when we look at a day the indices, we look at stocks, and we look at some commodities as well. If you haven't signed up for those, you can do so. If you want to go to annacooling.com, the sign up is there, so you're more than welcome. As I said, you're more than welcome just to come to this one, 2 or even 3. It really is up to you. In this session and all the sessions, we look at the markets through the prism of volume price analysis, supported by our quantum trading tools. And I know we have lots of new people come to these sessions, as well as some of our quantum users, some of our the students on the Forex program, and traders who just perhaps have read the books. But if you don't fall into any of those categories, you can learn about volume price analysis in the books that are on Amazon. But with Forex, we don't just look at the technical analysis, which is the VPA, we also look at the fundamental and related markets. It's what David and I have called a sort of three-dimensional approach to Forex trading, although this 3D approach is applicable to other markets as well. And I suppose to that, we perhaps need to add a fourth dimension, which is politics, but it's all explained in the books. We've actually bundled some of these for Forex. We call it the Forex Trading Library, and it's all of $9.99 on Amazon. It is actually the ebook version. So as I said, excuse me, let's turn off all this rubbish. I can't seem to turn that off permanently, unfortunately, the mail. This is the one of the slides from our Forex program, where you can see where we do it as a little graphic, where we've got Forex very much in the middle, we've got the bonds, we've got equities and commodities. Forex really sits in the middle. It sits at the heart of all the markets. It's the money market. It's where the money flows in and out the quickest. It reflects sentiment, it reflects geopolitical events, etc., etc., and it kind of ties all the other markets together. And in this session, obviously, we look at potential trades in different pairs, but we also refer to what is going on in other markets, because they all interact and they're all interrelated, all explained in the education program. Now, the indicators, the quantum indicators, there's a whole range of indicators, but we have 4 specific ones for the Forex market, and here they are. We bundled them together, what we call the currency dashboard, but you can buy them individually as well. In fact, you can buy all our indicators individually. We've got the strength indicator, the matrix, the array, and the heat map. I've actually got some trades going on at the moment. I've had going on since 6 o'clock this morning. I've actually only used 2 of them. I've got the currency strength and the matrix. I just wanted to show you how just with these 2 you can really pick out some fantastic trading opportunities. Both my trades are actually involve the British pound. One is the pound yen, and one is the and one is cable. Very much against the run of play with cable that's been so heavily, excuse the pun, pounded over the last few weeks. But we'll have a look at that, and also how we can interpret what the indicators are saying to what is actually happening on the charts and multiple time frames as well. So lots and lots of good things to come very, very shortly. As I said earlier, you can just buy one indicator, a bundle, or the full package. If you buy one and then want to upgrade to others or the package, you always get a credit. All future indicators, if you buy the full package, come added free to your package. So the last indicator we did to our full package customers was actually, we've got a pound index now. 24/7 support, and all the upgrades are included for free. And you also covered by a 7-day money-back guarantee. That's all the indicators, not the package, whether it's one or whether it's the full house, as it were. The indicators are available for MT45. I've got MT5 running at the moment. David's got Ninja Trader. We also do Trading View, although not all the indicators are available on Trading View, unfortunately, because of the script that they use. And we are now working on TradeStation, which is totally exciting. And as I said earlier, the quantumtrading.com is the site where you can find more information about the indicators. There are videos, support pages, etc. And I mentioned earlier the complete Forex trading program. That does include the full package of trading indicators, and you select your platform. And if you've bought anything from us in the past and you want to join the program, you will always be given a credit. And it really does. The program covers everything you need to know to trade Forex with confidence. And the website for that is quantumtradingeducation.com. I'm just going to stop there while I get my charts up. I pass over to David, and I can pause for breath and give him a chance to say something. It's my voice. My voice has come back. I feel better. So, you know, great excuse.
I don't think I've heard Anna talk that long for quite a while without coughing. So you're privileged. She's been very poorly the last few weeks, bless her, but she's feeling much better today, so it's great. We had to have constant breaks all the time in the previous webinars, so I hope they weren't too awful to listen to. Good to have you here. It's wonderful that the sun is shining in the UK. I hope it's shining where you are. It's certainly shining in the markets at the moment. As David said, gold and oil absolutely blazing, particularly gold, absolutely rocketed up, and it's pretty much what we suggested in a post I think we did a few days ago on gold that. If the dollar gets cattled, then you know, you're going to see a reflection in gold, and maybe this time with gold it will be a more extensive rally than previous rallies where it's really run out of steam. So if we get through $1,400 per ounce and on, then maybe we're going to break out of that trading range where it's been waterlogged for some extensive time. If this is your first time along, good to have you, and we're happy to answer questions. Either short questions we'll answer in the chat box. Longer questions we're happy to answer on air for you. So if you have anything you in terms of question, please just ask away. We're happy to do that for you. And a very warm welcome to everyone else, students, existing customers, and those who've just read the books. Welcome and good to have you here. I'm going to pass back to Anna. Focus primarily on MT5. Anna's on. I've got NinjaTrader running on my side. Lots going on, so I'll pass back to her and we will get going.
It's absolutely perfect, booming away with the best of us. Fantastic. Right. Okay. This morning, what happened? What's been happening this morning? There's lots going on. Thank you, Michael. Absolutely. It's it really the old pond was stirred up very nicely yesterday by Mr. Powell. Didn't manage a rate cut, but did enough to you know, to reassure the bulls in the market that all is well. You know, the Fed have got their backs, as it were. Well, we shall see. And of course, what happened was the dollar sold off, has been selling off, as we can see here. As I said earlier, I've just got two of the indicators from the dashboard up on my screen in multiple time frames. I've actually put the matrix on the same chart as the currency strength indicator. The currency strength indicator disassembles the pairs into their individual currencies, and we can see here I've got the 6, the 12, and the 30-minute. The red line is the dollar, and you can see the extent to which has been selling off. And on the 30, it's really bumping along the bottom. And if we go up to the hour, we can see the same situation, and we can see the extent to which it has been beaten down and been selling off very heavily in the Asia session, which is actually quite unusual, because the other thing about Forex is it is a 24-hour market, obviously, but these different sessions, time zones, financial centers, they do focus on their local currencies as well. And the dollar can sometimes be a little quiet in Asia, but because of the Fed yesterday, there's been a huge tick up in dollar selling. Now, when we talked about related markets, the consequence of a weak dollar is that gold has really taken a bit of a flyer. A weak dollar is normally very, very good for commodities, and certainly the gold is something we will look at later on, as I said, in our third session, and it's something that you can catch up with the analysis on the gold chart at my site at annacooling.com. And I think it's actually almost, is it first target was 1400, David looked at, we said 1400, and it was caveated if the yeah, I said gone through that, but we said 1400, and on the basis that if the dollar sold off, it would be given a bit of a lift. Now it's quite with gold, just stepping off on the stepping aside, a bit of a sidebar with gold, and you say, well, gold is used as it's a safe haven, etc., etc. Yes, it is all those things, and there isn't any inflation, and in a way it's because the dollar is weak, it's perceived as good value, as it were, and people have been traders and investors have been moving into it, and also it's something that possibly could hold its value, although everything, you know, the sun is shining at the moment, we don't know how long that is going to last given all the politics that are in the background. Anyway, we'll talk about more about gold on the third webinar. Right now, this morning, 6 o'clock is when I came a little bit earlier than I sometimes start, and the really thing that caught my eye was, first of all, obviously the continued sell in the US dollar, as we could see here, but what was also interesting was the buying in the British pound, as I said. So that's the first. That was what caught my eye first of all. The disassembly of this is the individual currency, what is being bought, what is being sold in this particular time frame, and across the three multiples that I have here. And I've got the 6, the 12, and in fact I should have the 30-minute, because that's really my kind of what I call my benchmark, my anchor chart, because I'm really focused on these on the faster time frames. They're not the fastest time frames that you can trade. You can trade on NinjaTrader down to the seconds if you like, but this suits me perfectly well, which David has on the seconds chart, and you'll be able to see that when we move over to NinjaTrader. So that was the first thing that caught my eye. Two quite unusual. I thought, let's see what's going on. And at the time, this is where the matrix comes in, because what the matrix does, it then picks up the pairs which are moving the most. Now, clearly from 6 o'clock this morning and now, things are very, very different. But we'll look at the charts and we'll have a look at see where the entry was, what was going on at the time, and why I chose the two pairs that I eventually did. And in fact, the two pairs that I focused on was the cable and actually the pound yen. And there were particular reasons for that. And the two reasons were, first of all, certainly cable was at the top. Pound yen was sort of following fairly closely behind, and on the 30-minute chart, the pound yen wasn't actually quite as wasn't moving quite as fast, if you like, as cable. But I looked at the chart. It was looking. The 30-minute was also on what I call a breakaway from the volume point of control, and I'll show you the volume point of control on the chart. And the whole thing was setting up to a really, really nice trade. And in fact, it has turned out to be two very nice trades, and also using the Renko to help with entries. And the Renko will also help to keep us in and also help to exit. Now, this is all that's happened, so we need to go catch up with the charts. What's interesting is we have had a reversal, because we talk about this all the time. As a trader, in a way, we're all reversal traders, in the sense that we're looking to buy low and sell high. That is what a reversal is, because you don't want to buy at a top and the market then carries on higher. You really want to buy at a point when you think there is going to be a decent reversal. That's what David talks about all the time. We talk about it, and that's what the CS is particularly good at. It's particularly good at highlighting these potential reversals. We can see here now that's been the rise in the British pound. It's at an extreme. What's it at an extreme against in this time frame? Well, we can see the dollar has now ticked up. So that's one way you can use the indicator. And what you then can go and check out on the matrix, well, is to see, now that was this was previously, obviously it's moved on since then. So where is the pound cable at the moment? And because this is the 6-minute chart, let's see where it is on I've got the 12. There we can see here the reversal has happened. Also, there has been a reversal in the pound, and against what? Well, the dollar is certainly turning up here, but let's just have a look and see whether that's the optimal pound pair. And in fact, it isn't. The one where it's possibly reversed the most, as you can see, is actually against the Australian dollar, because what the Australian dollar was this morning, I could have looked at the Australian dollar, it was actually quite beaten down. It had a bit of a surge, in fact, since I left my machine, you know, getting ready for this particular webinar. But just focusing on the two pairs at the moment. Looking at my 30-minute chart, where is cable at the moment? Well, I can see the reversal has happened. It's at spot 8, although it's still it's showing us it's still slightly rising, and the a dollar is still falling, but it's at spot 9, so possibly it's not really, it's kind of coming to a bit of a pause. So, and what's happening here, in fact, it's the pound Aussie, which is falling quite nicely. So that, if I'd missed all the trades from the 2 trades I had this morning, perhaps I should be looking at the pound Aussie. But I just want to go over what I did this morning. And here we are. I've got the 3-minute charts for cable, and we can see the reversal actually in progress at the moment. But this is the point from this morning. This is 8 o'clock, which is actually 6 o'clock this morning. The CSI, as I said, you can look at it from reversal trading in the sense that the individual currencies are at an extreme. So we know there's a point that you know, that something is going to happen potentially. When we develop these indicators, and we developed them, one of the reasons we developed them is we wanted to capture on the chart as accurately as possible the different phases of price action that we see on the chart. And one of the most important phases of price action on the chart is congestion. A lot of traders hate congestion because it's when the chart, nothing is happening, everything is in, you can see it as in agreement. So you can see here, this little phase here, it's really going nowhere. It's in a range. In fact, this is a much better example. This is actually a congestion phase with quite a lot of volatility, because you've got volatility candle, you've got spikes to the tops and bottoms of the candle. This type of congestion where you have fairly even space looking candles, they're pretty much the same size. They go up, they go down. You can define congestion in a number of different ways. You use support and resistance, etc., etc. But excuse me, we wanted something more than that. So we've developed this indicator called the volume point of control. It's based on principles of market profile. Now, what market profile suggests is that there is what's called a value area on any given chart, and what that tells you is that it's where the buyers and sellers are in agreement. There is no divergence. A trend is divergence. It's where the price is diverging from, if you like, a consensus. And now that consensus can be like this, quite quiet, not a lot going on, volume is so, you know, there's nothing going on until something happens. Now that something could be a piece of fundamental news, it could be a crossover. This is 6 o'clock, this is the start of the it's just before the start of the European session. So there's the kind of crossover. Traders are closing up, new traders are going to be starting. And those are the times when you will see congestion. And obviously, like yesterday, before a huge event like the FOMC. So I like looking for congestion phases because I know at some point something is going to happen. Markets don't stay in congestion forever, but it's recognizing what is the most important congestion phase on the chart. It's the fulcrum. It's the point at which it will actually break away with a degree a degree of confidence, as it were. So this is what I thought. Now, to get back to the CSI, what the CSI will do is it will also highlight and matrix these phases of congestion. They will do so in a number of different ways. They will do so when sometimes you the lines have been moving in the same direction, and then there is a divergence. So you will see them moving together. So this, if you see here, you've got a little bit here. You've got there's no clear divergence. So you know there's going to be a congestion phase. I like looking at that because I know some will happen. So you've got the reversals, or you've got moving in congestion. We can see here the dollar CAD, it's a perfect example of that. But that's not going to stay like that forever. At some point, there is going to be a a reversal. And what you see in one time frame, so if you see a congestion in one time frame and you compare it with what's happening on another time frame, it'll also tell you almost instantly, is it a congestion while there has been a trend, but that's an actual pause point? So maybe having that congestion in the faster time frame will tell you that it's just the pause point, and the trend that is in maybe the slower time frame is at the move that's in the slow is going to carry on. Crosses, where you see the two lines crossing, that actually tells you that the trend has been underway. So, but any trend that is underway will always come to a pause point. And the other way of trying to spot these, if you like, congestion phases, is to look at the pairs in the center of the matrix. It tells you they're not going anywhere unless they're moving fast in one direction or the other. But if they're kind of, you look across the multiple time frames and you see the same pair pretty much stuck in the middle, you think, okay, don't see that as a negative. See that as a potential setup coming along later. There's a reason why they're there at the moment. You just have to be a little bit patient. I've just highlighted with the indicators, you can actually take off all the pairs and just focus on the ones that you want to focus on. We're also coming up to the London Open. This is another fantastic time for potential reversals or a continuation of the original trend once the volatility has been got out of the way and traders have done what they're supposed to have done, and etc. And we also have the BOE later on for the British pound as well. So there's lots of different ways that you can use these indicators. Another way that you can look at the CSI, and this is for some of our users in the room, or those of you who may not have don't know about the CSI, are thinking about it, is if you just want to focus on one currency. So, for example, let's look at the other British pound. That's where. So we take off all the others, and we just have the British pound on its own. Take that off, so we can see what is happening to the British pound at any given time. And then what we can do is we can look at that and look at well, it's moving at the moment, it's being sold off, but what's it being sold off against? And this is where the matrix really comes into play, because you can see instantly. You don't have to look at this 1 2 3 4 5 2 4 5 6 7. You don't have to look at 7 charts simultaneously in this time frame. You can see instantly where the movement is for that particular currency. So that's another way of doing it. Right, getting back to where are we? We've got the pound yen and we've got cable. So the move that I captured from this morning. Then, as I said, getting ready for the webinar, we have seen a topping out and we've seen a reversal. And what I also use is a Renko. This is our Renko chart. This is a non-time based chart. So use with 3 minute the Renko, and I also have a 30-minute chart. This is what I use for my actual entry, and I also use it for the exit itself. Now you can either exit as soon as the colors start to change from this. You've got these in between colors. You can wait for the bright colors to come. It really does depend, and you use it in conjunction with what you see on the chart. The candle patterns. What is the volume telling you? There's a pilot. There's a ton of volume going in under here, as we can see, especially under that candle. It doesn't go anywhere. In fact, we then get a sort of bearish engulfing at the top, and the move looks as though it's coming to end, but it's also signaled on the CSI and also the matrix. Now we've had all the hoo-ha, we've got all the volatility coming up with the London Open anyway. And in terms of pip values, what have we got? We've got 2682. Let's see how that compares with the 3 minute chart. 2679. That's fine. You're never going to get exactly on the same pip value with the Renko and the time chart. So we've got say 2679. And assuming we looked at that candle pattern, we didn't, we said, oh, I don't really like the look of that. And we've got We've got 3 down candles, although from VPA, what have we got? We have got falling volume. There was an effort to rise. We've got a volume coming in, stopping volume, and an effort to rise. But I've actually got a 200 MA. I say, don't really like looking at that very much. And, you know, you could say, I'm going to come out there. But if you came out around here, what have you got? 2706. So you can do the math, which is a nice little move, you know, prior to the London Open, double figures. And I think a lot of short, I'm not saying scalping traders, I say intraday traders, I think would be very, very happy with that. Now, if we look at the pound yen, again, it was the same situation, but didn't carry quite as far. And again, off the VPOC at about, this was slightly later, this was 6:30 to about 20 minutes later, we've got a hammer candle here, not a huge amount of volume, but then, you know, it's the Asia session. Europe hasn't really come in. Then we move up, we have increase in volume. This candle here is a little anomaly. Why? Because it's a very compressed candle. It's got a reasonable amount of selling in there, but if that was going to move lower, that should have been wider, certainly under that kind of volume. Then it moves on higher, and you know, where would you have come out? Somewhere probably at this resistance here, because it actually hit it 1, 2, 3, 4. In fact, we did have quite a nice pullback. And what is the value from here? What have we got? We've got 136.45 and we've got 136.65. So another 20 odd pips or so. So that's really what I was looking at this morning. Looking at congestion, looking for the breakaway trading, yes, using the indicators, also very much, as I said, against the run of play for the British pound, in fact, buying the British pound, because, as I said, given what the British pound has been up to in the last few weeks. And in fact, you can see, if we really, let's take that off there, let's move that onto the daily chart. See what it says. Here we are. Let's have a look. Sorry, there's a docking feature on MT5 which allows you to move the charts away out of the profile onto another screen, but it goes a bit peculiar. There we are. That's cable, as we can see. This is the move down. It had a bit of a rally, but really it's been sell, sell, sell. And this is the move, part of the move that we have captured this morning. Right, I'm just going to pass over to David. As is there any way to have it in my MT5 for free? Oh, you've done that already. Thanks, mate. Fine. Right, brilliant. Right, I will pass over to David and I'll give you rest from my voice.
Over to Ninja. Bear with us a moment. Just check with Anna's side, make sure she's got my screen coming up. As I say, my machine is quite delayed on Anna's, and hopefully yours isn't. Hopefully it's just my machine. I'm just looking over to Anna. Still hasn't appeared. I don't know why.
There is a problem with GTW. There's a problem with their site.
There is a problem with GTW. It was very difficult getting the webinar up this morning, which is why we're a bit late. It still hasn't come up on Anna's machine. Hold on a minute. Has anyone actually seen? You're not seeing now. Thanks, David. Still. Right, it's appeared. I hope. I'm not going to move around too much. Thanks very much indeed. Thanks, David. Thanks, Melanie.
You'll be fine, darling.
I will try not to move around too much, just in case it is delayed on you. So I'll try not to hop around and just move the chat box out of the way. If it is delayed, can you just shout? I've been following the Aussie yen. Anna's been on cable, pound, and where are we now? Let's see, we're just into the London Open. Always volatility at that particular point, I'm sure you know. And I've actually gone down to, Anna mentioned the second chart. It's a feature of NinjaTrader. I've got the 30-second chart here. I've got the 2-minute, the 5-minute, and down the bottom I've got 10, 15, and over onto the daily for the Aussie yen, as I say. It's been interesting for those of you in the private chat room on education that there's been quite a lot of discussion, which has been fascinating, about the whole business of what suits you as a trader. And it applies not only to what Anna's been talking about this morning, which is very much congestion phases. And I'm just going to pull this up because this is just a classic example. It is a 30-second chart, but it just highlights the whole business of congestion and breakaways and brings volume in and support and resistance levels and everything else. But what it also highlights is the facet of what suits you as a trader. Now, that impacts all sorts of different areas of trading. First of all, you have to understand your personality, because if you're more suited temperamentally to trading as an intraday scalper, that's great, because you're trading to your strengths. An intraday scalper will like to trade multiple times a day, quite happily doing that. Not huge profit, not huge pip take every time, but lots of trades in and out all day long. And if you're suited to that temperamentally, then that's what fits. Equally, if you were a personality who prefers a slower approach to trading, would run a mile from that sort of approach, then you're going to migrate much more towards a slower term time frame, and you're not going to be trading so often, and you're going to be looking at the hourly charts, maybe the 4-hourly charts, even down to the daily. You're going to be looking for longer term trends. That's what suits you temporarily. It may also suit you from a life work perspective, because if you are working, you're full time, it's very difficult. You don't have the privilege of sitting in front of a screen all day long and trading away, if that's your suited approach. So it's fine. It's understanding yourself, which is why we always say on the education program, start with the psychology of trading module, because that will help you to understand what is going to give you the best chance of success. Because if you're trying to force yourself into doing something you don't feel comfortable doing, then you're not going to succeed. If you're more comfortable longer term trading and you're forcing yourself as an intraday scalper to do it because you believe that's what trading is about, then you're going to struggle, and vice versa. If you're more suited to intraday scalping and you're trying to force yourself to be a slower term trend or swing trader, whatever that means, then you're not going to be comfortable. So you have to find what's comfortable for you. I said this yesterday in the forum, you've also got to find what you enjoy, because if you don't enjoy doing this, if you find it stressful, then you're not going to succeed. You've got to enjoy it. That's not the adrenaline rush of gambling and all the rest of it. It's just the fun, the sheer fun of trading, the enjoyment, the pleasure you get from it. Win or lose, it's sorry? The money is very nice too, but it's actually enjoying what you do. You know, people go to work, they don't really enjoy what they're doing. And a lot of people, I mean, God knows how many people are trapped in jobs. They have to work to pay the mortgage and everything else. They just do it because they have to. This should be done for enjoyment. Yes, it's about making money, but it should be done. You should enjoy what you're doing. And if you don't enjoy what you're doing, change it. If you're trying to trade longer term and you don't enjoy it, well, try scalping. See if that suits you, but understand your personality. As I say, I've got the 30-second up here. I'm not advocating this as an approach that is perfect. It doesn't suit everybody. Some it does, some it doesn't. But what you can see here, the principles of congestion phases, and the other aspect, just going off on a tangent slightly, the other aspect you've got to understand about yourself is whether you're going to look for reversal trading, because that requires patience, or whether you're going to look for trend trading, which requires you just to jump in once a trend's underway, as looks breaking away here. This is what you're looking for. You know, you've been patient here. This is a 30-second chart. So we've been waiting here since what, 7:45 odd. We're now 8:07. So 15, 20 minutes odd. We're sitting here waiting as a scalping trader. Now we're starting to see it develop. We've got the London Open helping. There's all sorts of reasons. In addition to that, you've got the volume point of control here. So we knew where the heaviest concentration of volume was. We knew where the market profile was sitting. We can see the volumes up and down the chart here. In addition to that, we've got levels very clearly defined, very strong level here on the accumulation distribution indicator on Ninja, but it's exactly the same principle as works on the MT4, MT5. In other words, it's based on price. So the more a level of price is tested or retested, then the stronger this region becomes. The same principles apply, as I say, on MT4 or MT5, where those support and resistance regions, the solid lines are where you've got strong levels. The dashed lines are where you've got less strong levels, and it's exactly the same here. So we had a very nice ceiling here above, which has now been breached. And below we had a decent floor of support here, not quite so strong because the line isn't quite so well developed. It's not as wide, but certainly this one was very strong. So once we break through that, you can see we've got nicely rising volume. And that's really all it's about. And the other thing I would urge you to do, if you have Ninja or another platform that goes down into these sorts of very fast timeframes, it's a great way to learn volume price analysis very, very quickly. And you may ultimately find that that's what suits you, because reading a chart at that speed, I tell you, the opportunities are there. I scroll back over here. I mean, just to pick up one or two little, VPA lessons here. You see this little move here. You've got a candle here, decent volume under that one. Then you get another one. What happens? You get a wick to the upper body, strong volume underneath it. What's going to happen? You know for a fact it's going to roll because there's weakness coming in. You don't know how far it's going to go. Then you see the little bit of selling coming in. And bear in mind what we're looking at in terms of range here. It's very narrow. This is 26 up to 32. So we're talking about 6 pips here. This move here, we've gone from 31, 32 up to 37. This is only 5 pips. That may or may not be enough for you as a scalping trader. And the point I made yesterday, if you are a scalping trader, you've got to be aware of which particular pairs you're going to take this approach with, because if you are trying to do this on a pair with a 2 or 3 pip spread, you'll get absolutely annihilated every single time, because the maths does not work if you're dealing with that sort of spread when you're trying to take just a handful of pips. So by extension, you're going to be forced down onto the very liquid pairs, which have very tight spreads. You might look at brokers who offer raw spreads, different commission plans, whatever they may be. If that is your stall, that's fine, but be aware of which pairs scalping works for from a mathematical perspective and which ones you're going to struggle on, because that is ultimately going to be the case. You then go back to the VPA little lesson. Sorry, we had the volume falling away here. So, we're expecting that selling pressure is diminishing. We get pick up again. Then we get another bit of weakness here, short-term weakness. Is this market going to rally very far? No, because we've got rising volume, but the price hasn't gone anywhere. It's hit some resistance. There's selling coming in here, and we're into the congestion phase. Now we're starting to see it develop further. What do we get on this little rally, this little minor reversal here? What happened? That one's okay. We've got a decent volume on that. Then we see this one come in, pretty much the same amount of volume, but look at the wick underneath. There's buying coming in on that particular candle, so we expect the market to rally a little bit from there, which it is. We've now gone from 37 to 40, so we're now looking at 8-9 pips, which is a decent return for a scalper. Last candle, high volume, fine. Little bit of a wick to the upper body there, so perhaps a little bit of selling coming in there. The scalping traders are looking to close out here, get out of the market. We've had a decent run. Volume's pretty lightweight in terms of where we're moving. Let's just have a zip up onto the faster time frames, or slower time frames, beg your pardon. This is 2 minute. Here we go. On up we go. You can see also the trend monitor. And what's interesting, when you look at multiple time frames like this, what you're going to see is transition into bullish from here on 32nd, up onto the 2 minute, nice solid blue, up onto the 5 minute, nice solid blue, helping to support, no flicker of a change in here where we had this minor congestion phase, trend lines rising nicely, and down onto the very slow time frames, in inverted commas when you're looking at it from a 30-second perspective, of 10 minute and up onto the 15 minute. And you can see that bullish transformation on the trend monitor is moving through, and that's a classic example of how a trend reversal takes shape. It takes shape on the very fastest time frame of all, and then gradually, if it's a full-blown trend developing or even a reversal, it will ripple through on the trend monitor right the way throughout. You can see what's interesting about it here, and this is what the reason we developed it was to help traders manage positions through those horrible congestion phases, which we all suffer when we've got some money in the bank, the market moves into congestion, and then we start to panic because what we've already mentally banked in our account now starts to dwindle a little bit. We start to see those pips moving in the opposite direction, and we start to panic. And what the trend monitor does, it helps to smooth out the trend reversals into true trends, and the color changes here just simply reflect the fact that yes, the bullish trend was weakening a little bit. We went into the darker red, but we never actually went through into bright red to show a full-blown reversal. We then came out the other side into the darker blue and back into bright blue again. And the trend line here, you can see, stayed above the fulcrum point here of 0. It touched it here, but it regained strength. Now we're rising quite strongly again. And that's the power of the trend monitor. That's what it was developed for, purely that, because if you can hold through decent trends and maximize profitability, that will drive your trading account forward. And what most traders suffer is that when they've got a decent position and they start to see that reversal taking shape, they cash in. And then ultimately what often happens is it's not a full-blown reversal, it's just a congestion phase, a reversal, temporary pullback. We're going from a primary trend into a secondary, and then we come out the other side back to reverse to the primary again, and on goes the trend. And then those traders who've cashed in are left regretting their decision because they're now looking at what they could have had, whereas opposed they've actually banked quite a small amount. And had they had the tools and the emotional response to stay in, because part of volume price analysis also, one of the powerful benefits is not just about getting in, it's about understanding when a market is reversing, and more importantly, when it's just pausing in what we call a secondary trend. The primary trend will pause, it'll go into a secondary, and in the secondary, if you see something like, if you're in a bullish trend, for example, and you see a falling market and you see falling volume with it, then that is telling you loud and clear that that selling pressure is weakening, and therefore expect the primary bullish trend to be re-established. And it's another important, powerful aspect of volume price analysis, helping you to understand the difference between a full-blown reversal from primary to primary, or simply a pause in a secondary pullback or reversal against the primary trend, which is ultimately re-established. And that's what this business is really, really all about. And what VPA does in that context is it also forces your brain into an analytical mode and gets you away from that emotional response of, oh my God, I'm losing profit here, you know, pips are draining away, panic, hit the panic button, let's close out. That's what it's about. That's what it's there for. That's what it does. It forces your brain into analytical mode and gets you away from that emotional response, which is so dangerous and so damaging. Using multiple time frames, here we are. Just gives you lots of information. Yeah, we've got the bullish trend still going, but we're now running into the volume point of control on the 10-minute. So if we're a scalping trader, you know, maybe time is now to exit because you know, we're running into this region. We're going to see volume building. We're almost certainly going to see congestion at this phase. And moreover, above that, we've got this very, very strong line of potential resistance in at 42. So it's only 4 pips away. And it's almost, the market's actually climbed up there to test it already. So from, you know, a multiple time frame perspective, what we're seeing here is what we expect to see. We expect to see congestion. Another example of VPA, we've got a move to the downside here, and we've got falling volume. Is that a sign of strength or weakness? It's just telling you that that selling pressure is not strong right now. It's pretty weak. You know, if you've got a falling market and falling volume, then what you expect to see is what you're actually seeing is a pickup. This is not a sign of a full-blown reversal for the time being. And that's how to read it, and that's my point. You know, reading this chart doesn't mean you have to be a scalping trader, but if you want to learn and study VPA and you want to do it at speed, then step down to one of these really fast charts, because it will deliver exactly the same lessons, whether you're on a 5-second chart or whether you're on a 5-minute chart or whether you're on a daily or a weekly. It really makes no difference, and it's one of the beauties of volume price analysis. I'm going to pass back to Anna. Hopefully it won't be quite as slow as the last time. Bear with me.
Couple of questions. I started to answer a question about the up-down volume that you see at the bottom of the chart. Obviously, David's got Ninja. It's a different feed that that comes through. I don't know where his feed what his feed is. This is from XM. And because there's no central exchange in Forex, it's a bit of, you can't really compare volume feeds between brokers, because they'll all be taking a volume feed from the different market makers and providers in the market. So you'll never get an exact replica of what we're seeing on one or the from one broker to the other, but it's pretty good. This is actually reflecting tick activities. It's not actual volume itself, and it's a proxy for volume. And we do carry out the exercise occasionally. I look at what David's up-down volume looks like on Ninja, and in fact on TradeStation as well, and I look at my MT5. They are pretty close, and it's certainly enough to carry out the volume price analysis. And just to see how the what is happening between the price action and the volume. But as I said, just stick to one broker, and if you want to find out the quality of the feed that your broker is offering you, if you go over to 100forexbrokers.com, they actually list they list who they take their feed from. Is that okay? Is there anything else you want to add to that, Dave? Pretty much. So that answers. Oh yeah, it's kinetic. We use we pay for that. It's a kinetic feed. That's the other thing. With the MT4 and MT5, it's all bundled in. You don't pay for data. Whereas if you go to Ninja, you will have to pay for data. It's the yen. Absolutely, they're all heading south at the moment, which brings me to the pound yen. Just before we wrap up. This is the 3-minute chart, which I've blown up. This is the move that we saw from this morning's set. The volume point of control, for those of you, if you've just joined us, this volume point of control was down here at the beginning of the webinar. It's now moved up because it's dynamic and it's reflecting the fact that after the move higher, we did have this little bit of a pullback, but it's been broadly in congestion. We had the London Open. I have to say, for once on the 3-minute pound yen, not a lot of volatility, but essentially it was contained within a range, and we had a break. It looked like a break to the downside, as I said, a pull away from the VPA. In fact, we had a change of color on the trend monitor as well. But then this candle came in. And in fact, is that just a 957.7? That's just before the London Open, actually. And we have this nice deep hammer candle with a lot of volume underneath it, pushing back to the volume point of control. And in fact, it seems to be so far a successful break from the VPOC. But actually, you could also see it as a continuation move down here. So it went higher, went into congestion ahead of the London Open, and it's now continued in its original move higher. But it's also, we've been looking at the pound, but it's also a reflection of what is happening with the yen. If the yen is being sold off, getting back to this understanding of related markets, it's because the equity markets are positive. The yen is one of these currencies that acts both as a safe and a risk of risk on currency. So it's sold heavily when markets are going up and bought heavily when markets are going down. And what also on the tricks is because there's another refinement to the indicator. If you actually I highlighted the pound pairs to see how the pound is doing generally. We can see here it's going up. There's some buying coming into the pound, so I can see which of the pound pairs is being bought most strong, which are being bought most strongly. But because I have two pairs that I'm particularly focused on, I can bookmark these two pairs. So here's my pound yen, and here's my my table. Now, what is interesting with the yen pairs is they are all performing reasonably well, but the pound yen is not the best performing yen pair. It's the best performing of the pound pairs, but not of the yen pair. In fact, the best performing yen pair is up here, is the Swiss yen, then we've got euro yen, and we've got Aussie yen at number 4. So if we move up to the 12-minute chart, we can see here slightly different picture. The yens are kind of beginning to move up, again telling me that the equity markets are looking positive, and you can see the selling of the yen. So if you're in a pair or a couple of pairs prior to the London Open, everything is shifted. There's strong buying and selling in different pairs. You would close out and you would say, right, what's happening now? And this is what these indicators do as well. This is a continuum. Price action moves, it never stops. It stops at 10 o'clock on Friday night. So as intraday traders, as scalpers, we have to look for those opportunities and just dive in when we think there is a good trade. And you either use the concept of a reversal, or you look for congestion phases. And what these indicators do is they will highlight for you. They cut out all the looking at the lots and lots of different simultaneous charts. So you can see here we've had crosses on the Aussie yen. Oh, there's been so much going on this morning, which is actually very nice. But sometimes it can be thinking, oh my goodness, where do I go? Where do I go now? I can see all these opportunities. This is where the matrix comes in, because it picks out the pairs that are moving, as I said, the strongest. Now, if I take off the pound there and we can look where the yen pairs, the great thing about the yen, it's the counter currency. So we can see in fact, it's the CAD yen. You think, oh, great. Go and have a look at the CAD yen. For the chart, it'll then reverse at some point, but do bear in mind that things can stay overbought and oversold a lot longer than we can actually stay solvent. And if I take that there, we've also got the 30-minute chart here. We can see the Swiss yen, and where's my pound yen? It's about number 6. So it's not the one that's moving the fastest or the strongest at this particular time. And cable's gone a bit waterlogged. I think it's at number 19 here at number 8. So that's how you would use your the indicators and the charts, understanding price action, understanding a chart structure, understanding what are you looking at any particular time. Is something in congestion? Is it in trend? Is it about to reverse? Are we going to get a reversal in a faster time frame, which could be totally counter to what is going on a slower time frame? But is it going to offer enough of an opportunity to take the trade? As I said, there's lots of information there, but as long as you've got to start with a basic understanding of what you're looking at on chart. Is that okay? David, anything else you want to say? Do you want to answer this last question? That I'll,
So just to answer the question about the volume, Abdulaziz, yes, you can do volume analysis on any chart as long as you've got, you only need 2 things. That's a price chart, which every broker offers, and volume. And then it's a question of just doing your analysis. You can do it on, as I say, any broker. And the volume fees will vary a little bit. They always do. It's a fact of life. But as long as you're comparing like with like on the same chart, then that's perfectly fine. And if you try and compare volume profiles one with another, you'll drive yourself bonkers. We did when we first started, But after a while, you pretty soon appreciate that if you're just comparing like with like, in other words, using the same feed and you're not trying to compare different feeds, you'll find that it works absolutely brilliantly across all the platforms, whether it's MT5, MT4, Ninja, TradeStation, whatever it is, doesn't matter. You can just apply it. And to be perfectly honest, whatever the instrument is at the top of the chart really doesn't make much difference, because as long as you know what you're trading, it applies universally. I hope that answers that one for you. Pass back to Anna.
As I say, we've had a bit of an internet issue this morning, but we do, as part of the package, we do have individual indices for the currencies. So there's a yen index, a pound index, a euro index, and a dollar index. And as I said, you could use that as well. And as David said, they help to really give you confidence to stay in the trade, which actually is the most difficult thing to do when we are trading. Let's have a look here, just back on the pound yen very quickly. What have we got here? What have we got here? Yeah, we're still carrying on higher. I just move the time frame so we can have a look. And in fact, it's rather nice actually. If you have the chart in front of the matrix at the front, you can see the pound yen. It's at number 3, number 4 on 12, and it's actually moved up very nicely on the 30-minute chart as well. So with the and in fact on the 30-minute, it's swapping places with the Swiss yen. And if we have a look at the 30-minute chart, sorry, I've got to take it off docked. I keep forgetting. Change the time frame. Here we are. And in fact, what's interesting is it's actually also come at the expense of a volatility candle here. That's a whole another a topic for another webinar. So I will be looking at that quite carefully. Volatility is just an injection of momentum into the market. We have an indicator called a volatility indicator here. It triggers this in real time. It can be a kind of, well, just beware. This is what's happening. I can see that it's moving quite strongly. The matrix is telling me that, but it's also telling me that when there is this inrush of energy, it can also cause, once the candle closes down, I've got a minute to go, the price action can just sometimes just retrace to within the spread of the candle. And the candle then creates its own version of support and resistance. But we'll just have to see what happens. Let's see what happens on the hour. Yeah, and in fact, interestingly, on the hour, the pound yen is at its the VPOC is there. So if you like, it's looking to move away from that area. Just move back to the Renko. Sorry, I seem to be losing my templates this morning, which is a real pain actually. There we are. The Renko, what it does, it takes away the noise that volatility can cause, and it's actually holding you in. And what is interesting from this morning's move, this is the period, this is the pullback and the slight and the small reversal we had at the London Open. In fact, the Renko, it didn't go to bright red, it just stayed this intermediate color. It had some red dots and it's continuing higher. But volatility can also, as I said, it drives momentum into the market, but that sometimes comes at a price. So leave it at that, David. Anything else you want to say? Brilliant. We're going to stop there. We are back later. I hope you've enjoyed what we've done today and perhaps learned something that you weren't aware of before. I hope you can join us later. As I said, we are back at 12:45 our time, 12:45, and if you want to sign up, you can do so at my site, annacooling.com. So as I said, thanks for coming along and enjoy the rest of